Well, welcome to this discussion that we're having for high net worth clients in the Middle East investing in local and international real estate. We're going to have a discussion with four parts to it, focusing on market outlook for the economies of the GCC. We're going to discuss financing considerations for those acquiring property, wealth structuring for holding local and international real estate, and finally, we'll look at how high net worth investors in the Middle East should manage existing property assets that they might own. So coming first to the market outlook. For wealthy families in the UAE, Saudi and Kuwait, what's the market outlook for real estate within each country? And Alistair, you're based in Dubai. What is it that you see from your perch with clients in each of those different parts of the region?
Yeah, thanks, David. It's a really interesting question, and I think it's a classic example of where perhaps lumping the GCC together as a jurisdiction for those looking, say, from Europe to the Middle East, and think that the countries are sort of can be put together very simply and have vast similarities is a mistake. So if you take the UAE, for example, there's a lot of land available here. You know, the contractors and developers here have been going gangbusters leading up to Expo 2020. There was already a lot of oversupply in the market here. And of course, you know, COVID-19 and what's going on at the moment has really, you know, put additional downward pressure, I would say, on the local real estate market. And I think that, you know, what we're seeing is a lot of expats are going to lose their jobs, unfortunately, so they'll have to relocate. And the UAE is probably more exposed to that dynamic than other jurisdictions. Particularly here, I'm thinking about the professional expat class rather than your migrant workers, because a lot of the development is aimed at that higher segment. So I think we'll see downward pressure in the UAE. Obviously, retail and leisure is absolutely huge in the UAE, and particularly in Dubai itself. So if you zoom in even further, you might see particular pressure in Dubai in the hospitality and leisure sector going forwards. As regards Kuwait and Saudi, very different dynamics, I would say. You know, Kuwait, much smaller place, land is at a premium, perhaps over the years haven't invested as much in country as other jurisdictions due to fears of political risk and so on. So I think that the dynamics there are slightly different. Don't build in the same way targeting expats, but of course on the commercial side, they will still face some of the same pressures that we're seeing in the UAE. Saudi, completely different again. Obviously this huge vision for development in Saudi Arabia, opening up the tourism sector and so on. And they've already announced that a number of those projects are likely to be delayed, not necessarily cancelled as such, but people are watching that very, very closely, because that is the key driver for Saudi going forwards and opening up the economy and so on. So very different. But I hope that's a good summary of the position.
Very helpful. And Christopher, just to bring you in, so Alistair touched on some of the pressures for UAE clients, say, in the hospitality and leisure sector. Obviously, the oil price is at record lows. How do you see the macroeconomy effects filtering through to clients that you're speaking to in the region?
Yes, it's a good question. The macroeconomy does have an effect. The oil price having come down, being depressed, but also more recently with the COVID-19 crisis, a lot of clients are also having to maybe prop up their own businesses locally. So the priority of investment is different. Property also as an asset class is compared to other investment opportunities, and the investment opportunity more recently has been probably more into in the equity markets. Now, longer term, it does remain something which a longer term investment that clients do like. Um, the the property markets are also shaped by geopolitical events and what's happening in the region. And for example, London and the UK does have, despite Brexit and ongoing political drama, does have a relative stability compared to some countries in the Middle East. There are also some other changes that are affecting. I'd be interested to hear from Alistair, as a matter of fact, of the introduction of VAT in Saudi Arabia, and that being tripled from the 1st of July, as that applies on land.
Yeah, absolutely. I mean, that was a bit of a surprise, I think it's fair to say, to most of us. Not that I suppose subsidies might be cancelled and so on, but increasing that, as you say, threefold was quite a bold move. Again, the Saudi economy's very different to, say, the UAE, because the natural question that we were asking ourselves is, what's next? Who's going to do this next? Will the UAE follow suit? And they quite quickly came out and said, actually, no, we're not planning to do that at all. But the Saudi economy is geared towards a much bigger population, domestic economy. So scaling up that to pay for some of these costs is a brave new world, I think, for the region generally, and Saudi in particular. But perhaps a good move at the right time.
Thanks for that. And Robert, just to bring you in, so you deal a lot with clients across the GCC. I mean, what do you see from their sentiment and their views on international property from your dealings with them?
Well, I think both Alistair and Christopher highlighted, for the sort of family office, high net worth clients that we all serve, is that London is always on the list of locations to buy a property. And people buy a property for many reasons. They might buy it for their children to study. They may buy it as a holiday home, and we manage a lot of private residences as well as assets. Or they may see it as a pure investment and somewhere to make a part of their portfolio where they feel there's a very strong rule of law and, relatively speaking, relatively speaking, political stability. And certainly since the election, obviously we have a number of years now where we know what the government is, although we don't necessarily know what they're going to do. So in short, we have, in lockdown, both been involved in the managed sale of assets for clients for their own reasons, which were not economically related. They were to do with a change in lifestyle. For people who've acquired someone, we signed a client in lockdown. We've found the property, and we're in the middle of negotiating that with a suitable COVID adjustment in pricing in that. And also in terms of the residential assets, rental assets that we manage, we see we've had some considerations we've made to long-standing tenants, but generally speaking, we've been fortunate, and I guess it's the type of properties that we operate and the type of tenants that we have feeds into that. So my view is that the sentiment is that London is always on the list. So it's in the option box, and that people will look to continue to buy. What we're really looking at is what is the volume of that. And I think that has got to be impacted negatively because there will be people who will be focusing clearly on their core businesses. And Alistair mentioned, leisure, hotels, shopping malls, that kind of thing, retail, where we have clients who have very large holdings in those in all the countries. And, if you're not getting your revenues from your core business, you have to then perhaps not buy the next asset in London. So I think there will be lots of transactions, but I think volume will be down because the macroeconomic position will dictate beyond sentiment what is available to invest, I would suggest.
Thank you. And Alistair, we're still in the early phases of this COVID crisis from a long-term perspective, but how are you seeing investors in the Middle East preparing for this new environment, this new normal, which is an overused phrase, but are you seeing any trends through these early phases for how investors and families are thinking about wealth planning and real estate in the longer term?
To some extent, David, yeah, we are. I think what's interesting is just obviously time is as time goes on, families have maybe done their firefighting. So if they've got their operating businesses in the region, that was the focus originally, quite naturally, and it will continue to be a key focus going forwards. Obviously, they need to start looking at things, the wider picture as well. So the investments that someone like Christopher might be helping them with internationally, let's say, what's happening in the markets, that was all up and down like crazy. So of course, grabbed a lot of headlines and attention. And then I think slowly what we're seeing is then people starting to turn their attention back to the longer term outlook. And I'd say in terms of trends, we are still seeing some transacting going on, particularly into the UK, into the London market. A couple of big transactions on at the moment into the residential space, and I think residential will hold up okay, to be honest. If you're looking at it from a long-term view and you've got a bit of cash sitting there, good diversification play. You're likely to see, I would say, downward pressure on prices in the UK, for example, which will present opportunities. In the commercial space, it's slightly different. I think because of the uncertainty of what office spaces will look like going forwards, is there going to have to be a large requirement of capital expenditure to convert existing offices and repurpose them following this, or are we going to find a vaccine and suddenly everything's okay and we can all go back to open plan offices and business as usual? But if you're savvy, and my advice to everyone out there is, whether it's residential or commercial, is start talking to your advisors and engaging now. And if you don't have any, make contact, because you want to be ready. If you do believe that there's going to be a long-term opportunity in whatever market it is internationally, then be ready. And I think that's really, I suppose, the trend that we're seeing, is we're having a lot of these types of conversations with clients, so that they're ready as and when they want to push the button and they feel comfortable enough to re-enter the market.
Thank you. And Christopher, just to bring you in, how are you seeing clients mitigating risk through investments, through financial investments, locally and internationally? How might you help them mitigate some risks in these choppy markets?
Okay, yes, definitely. It's as Alistair was mentioning, it's important to have a good advisor to help you navigate the current environment. Diversification is always key. So whether it be through your liquid investments or through the property holdings. So I think property has always been a key to diversifying wealth outside of the region. It would be London, the south of France, and other places. So, and the same applies to their investment portfolios held in banks. They have their local investment holdings in the region, but they do also look at opportunities elsewhere, and also connecting them to the fast-growing markets, say in Asia or elsewhere.
Robert, how do you help clients mitigate risk for assets, London property assets that they already own?
Okay. I think what's important for us is to look at how the client is being advised. We don't operate in our business on any percentage commission of the transaction. So our advice doesn't come from a position of potential conflict. So we're able to look at the situation dispassionately and keep the client at the center of everything we do. So the key thing for an investor, if we're looking at rental properties, which is a big part of the market, and is also easy to identify how you can make an impact because it's there on the bottom line, we operate in such a way that our clients effectively make more money. So for the clients that we have under our umbrella, in our discretionary managed situation, they generally make more money. I think it was something like 9% more net rental income last year. So I think the question you have to ask is, if you have this client bank and if you wish to retain them, and if they have assets in London, which is where we operate, is the standard, just going to an estate agent, however grand, is that the only option that you have? And I mean, we work with the best in the business, so there's no downside to our clients in terms of execution of transactions and things like that. And we cover acquisition, rental asset management. We also manage people's homes, and we do a managed sale thing. And I think we've proven time and time again how effective a advisory service that's not driven by the what's in it for me from a commission point of view. And I'm not a communist. I've got nothing against people earning commission, and we work with the best agents in the business. But I think if you're getting advice, especially in a time of pivot like now, where nobody is perhaps finding sense in what's going to happen next, because the macro factors haven't played yet. And we're still in a bit of shock and awe and finding our feet, and all glad to have survived physically. I think you need to have some solid advice that is not driven by self-interest. Of course, we are going to earn a fee, and but we're going to deliver value for that. And it's rare that the advice we give, in fact, has a net cost to the client, because usually, the effect of it is that they're better off. And I think that's what you've got to look at. I think if you're a trustee, if you're, a wealth, a partner in a law firm that's dealing with private wealth and family office, if you're a private banker dealing, with a level of clientele, you have to look at the status quo as being a very dangerous place to be right now. And you've got to look a little further than, those 2 or 3 agents on your list and the job's done. And I mean, thankfully, people that we work with in people who send us business recognize that. And not everybody has the time to nuance their clients. So I think the answer is everything you do has to be driven to optimizing the return for the client. And if you're doing that, then in the long term, you're going to win. But if you're a fiduciary and advising clients and you're not really doing anything different, I think it's a risky place to be.
Thank you for that. And just moving on now to financing property transactions. So, Christopher, coming to you, with interest rates at historic lows, I mean, do you see clients typically having an element of gearing in a property transaction? What's your take on that?
Yes, that's a really good question, David. So yes, having an element of gearing does make sense for several reasons. The first one is that in the current environment, interest rates remain very low, and will probably remain low for a long time to come. So it allows them to do something else with their money, invest into other property, invest into other financial assets. Also, depending on the structure, they might be able to offset some of the cost of that borrowing against the rental income received from that property. And thirdly, for speaking about the UK specifically, and I'm sure that Alistair could tell more about this, but having debt attached to the property does make sense from an estate planning perspective, and can potentially mitigate against a future inheritance tax liability.
Yeah, Alistair, if you want to come in on that point, we're covering estate planning in more detail in the next section, but why not cover off that point now?
Yeah, I think as we're touching on it, yeah, absolutely. I think whether it's just to summarise, whether it's an investment property, as Christopher says, debt can really help with your income tax efficiency. If it's a residence that you're thinking of living in, then it's going to help you with inheritance tax. So that's just a summary for now, and we can come back to it.
Terrific. And Alistair, staying with you, so for your clients in the region, how important is Sharia compliance in the financing they're arranging for domestic and international investments?
It's a great question. It varies tremendously. So as a firm, Trowers and Hamlins do a lot of work on the Sharia side, particularly on financing real estate transactions into the UK. If for individuals, I would say, there is no common trend. Let's say it's very personal. At the institutional side, it's slightly different, as very often institutions have a requirement. They will have a Sharia board. They are Islamic in their investment philosophy, and that has to be followed. And in those cases, clearly, Sharia compliance is absolutely fundamental. Now, an interesting point here is that Trowers and Hamlins have a very strong reputation, actually, for essentially developing or devising an arrangement which uses conventional debt, but through your structuring, you're able to change it to Sharia compliant or ensure Sharia compliance through the structuring and the way that that's done. Why is that important? Well, it's important, obviously, to ensure that for the investor, they can invest in a manner that is appropriate to their religion and their investment philosophy. But it's also important because it gives you access to a greater range of finance products available. And in this market, I think that's really important.
Thank you. And in terms of your experience of dealing with banks locally in the UAE, are they able to provide the credit facilities for people to invest internationally, or is that where the global brands step in because they've got a more complete offering, helping clients invest in the UK, the US, or elsewhere? What's your experience of dealing with the local banks?
Yeah, again, it varies, but there's some institutions are very strong on their international investment proposition. I mean, two examples that spring to mind would be FAB in the UAE, lend a lot on UK real estate, and also MBK, so National Bank of Kuwait, obviously in Kuwait, very prominent in those markets in their home countries. There are many others as well that I probably should mention, but haven't. So yes, they are very strong. I think that as you move out of those prime markets like the UK, France, Germany, Switzerland, then you'll start to see a thinner proposition, let's say. But that's probably true across the board for most international banks. It is a very competitive space on the lending side as well. So I think clients, whilst they may like to bank with their local institutions that they're familiar with, would be wise to survey the market and see what else is out there, because pricing should be pretty competitive at the moment. So Christopher, you might have a view on this, but where a particular bank may not be keen to lend on a real estate asset in a particular jurisdiction, there may be other ways to assist the client by, for example, lending on the basis of the portfolio that they hold with the bank.
Absolutely, Alistair. So it's a very good point. Yes, we can lend against a portfolio of investments, and we can also lend against property in London, Dubai. So we can find ways of finding that liquidity to purchase an asset.
And I mean, Christopher, just staying with you then, I mean, credit facilities generally are readily available for families in the Middle East. I suppose it's just looking at their overall wealth profile, assets under management, experience, and things like that. I mean, how do you evaluate clients you can help in the region?
It's a good question. Yes, borrowing is available to clients in the Middle East. What they need is a bank that can understand the complex nature of their income stream, and also be able to look at their overall asset base. For example, the ability to monetize liquid assets as part of understanding a credit proposal. And I think an important aspect is also the cultural understanding, having a bank that does have the cultural affinity and understanding of how business is done in the Middle East, and being flexible in terms of the terms proposed and the preferences. So being able to lend in a Sharia compliant way, or maybe in a more traditional way.
Terrific. And now just moving on to wealth structuring. So Alistair, just coming to you first. So how are properties within the UAE typically owned? Are there any trends in structuring there for high net worth investors?
Yeah, it's a very interesting time actually in the UAE for structuring generally, but particularly in relation to real estate. So I suppose if you look back 20 years, very difficult for foreigners to own real estate here at all. That changed a lot over the last couple of decades, and people have been buying villas and apartments and so on in their own name. And there was always a question mark about what happened to those assets, when they pass away. Fast forward a few years, the DIFC, which is the Dubai International Financial Centre, an area that has its own laws based on English common law, came on stream. One of the innovations recently has been the introduction of what are called DIFC foundations, very similar to trusts in many ways. And the relevance here is that DIFC foundations can be used to own land in certain cases. So that can be a very useful structure for succession planning and wealth preservation generally, to ensure your assets are consolidated. And we've seen a lot of interest from both expat clients, but also in the local population as well within the UAE. So really exciting time, and I think that will be a continuing trend, and one that I would say as a stakeholder in the market, I have an interest in the health of the economy and so on. I think it's really important that these types of solutions are available to clients if you want to ensure that your market is going to thrive. So going forwards, if you have security over your assets, then clearly people will look more favourably on a jurisdiction such as the UAE than perhaps they would have done previously.
Absolutely, very helpful. And for foreign properties, I mean, we touched in the lending section on the use of debt to manage estate tax liabilities, but how are properties typically held? Obviously, there's been a lot of change in recent years. Why don't you give us a view on UK properties held by Middle Eastern families?
Sure. I mean, that UK remains by far the most popular jurisdiction for Gulf clients holding residences. And you're absolutely right. Tax changes over the last few years have meant that a lot of clients have had to restructure. And the main driver for that is always, for structuring generally, has been inheritance tax planning. Now it's much harder to avoid inheritance tax in a very simple way by using an offshore company. So we've actually been helping a lot of our clients to unwind existing corporate structures that hold UK property for family use. And it's very important to have that distinction in mind. You really have to zoom in on exactly what the property is being used for, because your solution will be very different depending on what you're using the property for. So if it's family use, generally speaking, corporate ownership is not going to be the best solution for you, or have additional taxes and not help you with this inheritance tax. That raises the question of what do you do next? So, and how do you deal with things like inheritance tax? And that's where, for example, debt can be of great assistance, because, put very simply, provided it's properly arranged, you would only be subject to inheritance tax on the net amount of the property after you've deducted your mortgage. So that can be very helpful. Another thing that we're doing a lot of is helping families to spread the ownership of properties amongst multiple family members to reduce the incidence of inheritance tax. Contrast that very quickly with investment properties. Very different approach. If you're looking at some scale with your investment properties and you're using debt, then a company is very often the right way to go still, because it will save you a lot of income tax, and obviously gives you limited liability and all those types of good things. But the main thing from a tax perspective is saving income tax.
is the use of insurance common in terms of matching estate tax liabilities? I mean, can Middle Eastern clients easily arrange sufficient insurance to cover sort of global liabilities? What's your experience on a client?
Yeah, the answer is yes, it can be used, and it's something that we always raise with clients when we're having this discussion. In terms of how many of them want to pursue it in practice, I think for cultural and religious reasons, very often it's ruled out at the outset. Some will look at it, but in our experience, it would tend to be investors who are not necessarily part of the local population that are investing back into places like the UK that would go for the life insurance solution, but never rule it out. Always think about it, and if you're comfortable with it, then it can work very, very well.
Christopher, have you been involved in arranging any life insurance for clients who are investing in real estate? Is that something that's part of a broader proposition of wealth planning from colleagues?
Yes, so I would echo what Alistair is saying. It's always part of our conversations, but for cultural reasons, it sometimes doesn't go ahead. But I've seen a trend of that changing, and I think the next generation definitely has that in mind, and we can arrange. There are underwriters that will insure clients resident in jurisdictions in the Middle East, and it does make sense to combine that with the with borrowing, for example, against the property to insure against the equity held in the property. So yes.
And Alistair, I mean, we've mentioned the UK as a popular place, but I mean, are there other places that tend to crop up as popular places to invest? And I understand that you advise on the UAE and the UK, but are there things that people consider? Are there ideas that you've worked with other advisors on that have been successful for clients in terms of mitigating estate tax liabilities on investments outside of those jurisdictions?
Yeah, absolutely, David. I mean, we as a sort of international private wealth advisors, we touch on many different jurisdictions, and there are a number that crop up all the time. So you would have typically the UK and places like France and the USA, and now more and more common, Portugal, Spain are coming onto the radar more, I would say. Also, interestingly, in this region, you see more and more Cyprus coming onto the map, and the reasons are very varied and very different. I would say, you'd be looking at like France and the US as either investments or as second homes or holiday homes, versus places like Cyprus, Spain, Portugal, maybe as investments, and some of those investments tied to visa arrangements, for example, so residency programs. Most GCC countries, you're not supposed to have a second citizenship, but there are residency options as well. So you will see a lot of people acquiring properties to take advantage of those things. And of course, the same issues arise as they would with a jurisdiction like the UK. Any mature European destination or the US, North America, have complicated tax regimes, which mean that you need to structure specifically for that jurisdiction usually. And we're very often involved in helping clients to get the advice they need. Fortunately, in respect to some of these jurisdictions, there are relatively simple solutions that work for clients to mitigate taxes, and in some cases, very favorable double tax treaty regimes. For example, France and Saudi Arabia has a relatively favorable regime. So yes is the answer. There is a lot of need for structuring these things.
Great, thanks for that insight. And just finally on this section, I mean, for clients thinking about wills locally and abroad as part of an estate planning strategy, what are the sort of headlines that people should be thinking about if they're resident in the region?
Yeah, I mean, it's a really hot topic at the moment because unfortunately, what's going on is focusing people's minds to really think about, have I got the bare minimum protection in? You can forget your offshore trusts for now and your whizzy foundations. Have I got a will that's going to protect my family if something happens to me? So very, very relevant and very important. And again, there's definitely no one size fits all approach. The factors that that play into this typically are, where are the assets and what are they? So are they real estate or are they shares? What is the domicile or habitual residence of the individual who's owns the assets at the moment, because that will play into your solution. And as you said, where are they resident as well? Now, you take somewhere like the UK, for example. I'll give one very simple example. If you own property, real estate directly in the UK, you need an English will to deal with that. It will pass under English succession law, and that's the end of the story. If it's in another jurisdiction, then their own domestic rules will dictate that to a certain extent. But it's unfortunately a bit of a minefield. When you start doing this succession planning discussions with clients, you quickly find that it is a real jigsaw, and you've just got to put the right pieces in the right place. But a lot of clients, I suppose, to answer one question that might be out there, a lot of people come to me and say, Alistair, I need an international will. Can you help me? And I say, I can help you with the right wills and with wills, but there is no such thing as an international will, unfortunately, at the moment, that would be recognised in all jurisdictions.
Very helpful. And Robert, just to bring you back in, we're going to look now on the full section on managing existing assets. You've got a lot of experience of dealing with family office clients across the GCC. I mean, we touched on sentiment at the start, but since lockdown, what have you been seeing about clients looking, to buy, sell existing UK property? What are they thinking, and what are they discussing with you right now?
Well, I think initially, obviously, everybody was just in a state of, what's next in terms of the pandemic. But since then, I mean, it's a balance, really, David. There are clients who we were in discussions with before, who were looking at thinning their portfolios. They feel they'd achieved all they could. Maybe they've held them for 10 years or more, and they wanted to dispose of some things. And that was a program that we were already engaged with, for those clients. And then, sort of equally balanced are clients who, for a range of reasons, are looking to buy. And we haven't had anyone particularly say, no, we're not going to proceed. I think what's absolutely vital is if you're buying or selling, is to be positioned correctly in the market at today's values. And there's a lack of data in the last few months as to transactions completed. And those transactions that completed, that may be evidenced through the land registry, whatever, are pre sort of February and February 2020 and before. So before the shock and awe and the real magnitude of this pandemic hit the world. So I think what you've got to be is realistic in dealing in today. But if you're selling, you need to have some advice that is agnostic in terms of the transaction, so that you're not taking advice from someone who's is going to make 20, 30, 40,000 pounds out of completing a sale for you. And also in terms of buying, everyone is selling their fish, and the agents will be looking to sell that stock, and they've had a paused business, so the cash flow for those businesses must be in difficulty. And you need to get advice that is independent of that. Probably unlike any other time in my 35 years. I think that's always true, but I think even more so now. So my advice would be, you need to seek out, advice from your, professional advisors who are going to help you in the right direction. Because these people aren't domiciled here mainly, as Alistair and as Christopher know. They're looking in, they're coming with a position of trust. And, the question is, when they're advised to go to someone, is there some, dislocation of that process of trust when handed over to someone perhaps who earns their living by making sure they complete a transaction, And I think, that's where we position ourselves, obviously. And, I think that's the thing. And I think, we're buying something, we're in negotiations now for a client who is known to us from Dubai. And, we are working with a team. In fact, it's Alistair's firm. We sent them to him, to the London office. And the reason behind that, you've got to get that planning in early, like Alistair's saying, and you've got to get the best advice, structuring. It all matters, it all matters, and get it in early. And the old saying, marry in haste and repent at leisure. So whether you're buying, selling, or renting, you need people who are agnostic in regards to how they earn their money. Not agnostic how they earn their money, agnostic in terms of that it's not reliant on the transaction. That in the best practices of any kind of fiduciary care, you are being given sound advice, because the transaction we're buying now, the two sons and the mother who was in lockdown with them in London love the property, totally led by the heart. Father, who's based in Dubai, and I are looking at it from the head and thinking about what it is today. And the vendor was, most disappointed with our initial offer, but is actually coming back to the table closer to where we are than where they were. And if you didn't have good advice, then, these guys would be saying, Dad, buy us this flat. It's fantastic. And they'd, negotiate a simple £50,000 or something like that and feel happy and they had a good deal. But, it's very important because we have to think about the long term of our clients. And we want to be dealing, with them for many years to come, not just one transaction. Like, Alistair and Christopher's business, it's exactly the same. You take a long-term view. And property is a long-term business, but there's a lot of short-term view taken by people in practice in property, sad to say, and it's not really changed in the 35 years I've been in it. When you look at the people buying and selling property.
And how have you found just this new way of working, the virtual, connectivity with clients? You've been involved in transactions. How have you found this new method of communicating with people?
Well, as you can tell, I've spent 2 months in hair and makeup and in lockdown, in readiness for this. But I haven't managed to grow a superb moustache, only because, I don't know, maybe it's hormonal, who knows. But what I actually love it because I was referred a client in lockdown by trustees. And that client has 11 properties in a very smart part of London. 8 of which are residences that they use as their summer homes. And I would not, this particular client's in Saudi Arabia, I would not have been zoomed in to the principal, the principal's family office head, and their various assistants that are kind of helping them. And I had a call very much like this, where I was able to talk to them face to face. That wouldn't have happened before. So I think the communication aspect of it, as a business, I feel is just a fabulous opportunity to let people let us meet, really, where we might be having to plan a trip for 2 weeks to the GCC region and go around here with all the attendant cost and everything else, and people can have that quick half an hour. They can look at you and go, you know what, I could not stand that Robert Evans. He talks too much. We're not going to go with him. Or they could say, we like that guy, and we get a sense of he's going to look after us, and we can do that very quickly. So for me, it's a fabulous opportunity. I think. I don't think it's a negative, actually. I don't know what the other guys think.
Alistair, Christopher, as we come to the close of the conversation, is there any thoughts on lockdown working? Has it been good for you? There's obviously frustrations attached to it. How have you found it?
Yeah, I would say that, as Robert was saying, communication with clients through video conference, for example, has been good. I think also just clients have been in lockdown too, so it's been a time of reflection for them and think about strategic long-term objectives. On the financial markets have been very volatile, so that's been a time of opportunity for clients who've been maybe waiting on the sidelines to re-enter, or to position. Lots of discussions of positioning portfolios for a post-lockdown economy. I mean, here at Standard Chartered, we have clients in over 110 countries. We have a physical presence in 70. So from a technological standpoint, we've been able to adapt very quickly and easily to this, to these circumstances. But personally, I also look forward to being able to fly out and visit my clients once again on the ground, as I think that there's something about a face-to-face meeting that you just can't quite replicate over the phone or Zoom.
Thanks. Alistair, anything from you on working in lockdown? How's it been?
Yeah, no, it's really interesting. The dynamics are interesting in different places. And I think, unfortunately, the currency I deal in very often in my line of work is ultimately what happens next. And so what happens when someone dies? And it's not, the best topic of conversation or people's most favorite topic of conversation. But anything like this, which focuses the mind, it could be this, it could be political instability or so on, suddenly brings into focus why people like myself are valuable, and having those relationships with your clients is so important. And what I found interesting in lockdown is that in many ways I've become closer to a lot of what I already considered to be very good clients of mine, but you can see them turning to you when you want them to turn to you for initial advice. And now, if it might be something non-legal, it might be property related, it might be back on the banking side, but they'll come to me because they trust me. And in all of I think it's fair to say, in all of our industries, doesn't matter what it is, that is what the relationship that we want with our clients. And that's so important. And if you've got the network, not just with your client, but you've got other professional advisors that you work with regularly, on a non-exclusive basis, I should add, people like Christopher, then it's so helpful. I mean, Robert was giving an example earlier, passing one back, where he's been incredibly helpful in a sale for one of our clients, and that is not COVID related. There's a tax reason why they need to sell the property by a certain date, and of course with this what's going on, it's been incredibly hard to get viewings and so on, but inshallah, a sale has been agreed subject to contract, and that's in no small measure down to Robert. But the key part of that really is communication, because Robert has been constantly communicating with the client. I've been in touch with the client, drop of a hat, and it works so well. So doing these types of calls is actually been quite useful, I think. And I hope that some of this will carry forward as we move on.
Perfect. That is a great note to end on. We look forward to taking some questions now live from our audience in the webinar. So gentlemen, thanks very much for the discussion this morning. Really interesting. Thank you.